All right, Rob. GDP is growing, but not for the reasons you think. Last quarter's 2.3% growth was entirely fueled by government spending, while the private economy continues to shrink. Is the U.S. heading for a hidden recession, and will new economic policies change course? Today, we're unpacking what's really going on behind the numbers.
Gary, moving to thing number 4, GDP growth is misleading.
So, Rob, last week we got a fourth quarter GDP announcement with growth of 2.3%. That was down from the prior quarter's 3.1%, but in line with expectations. So, the question here, like, is that good? Is that bad? 2.3% growth. It's not great. It's not bad. It certainly isn't big enough to cause the Fed to alter its current policy. So that's what we were talking about before. If this were a situation where, inflation was up a bit, that will prevent the Fed from lowering rates. But if we had bigger GDP growth, they'd be safer raising rates, but they're not. 2.3% isn't enough to cause the Fed to say, okay, we need to raise rates. This is also a situation, again, you talked about a bifurcated economy. Declines in consumer spending and investment were offset by higher government spending. And then, the other thing we saw was a continued trend for lower goods prices, but higher services prices.
Gary, 2.3% GDP, right? If we're just looking at that number, not a bad number. I think we talked about it a little bit with the bifurcated economy. Is that why you're not more optimistic on the economy? Because essentially we're seeing two different things here between public and private.
Yeah, I think the whole GDP number is faked. It is just absolute nonsense. So to give you a sense, Rob, in the quarter, the increase in GDP was under $400 billion. The increase in government debt, and this is just the on-balance sheet number, was over $600 billion. In other words, more than 100% of the increase in GDP came from debt-fueled government spending. And, one of the things that we've been tracking is, everybody's focused on DOGE, right? The Department of Government Efficiency. And what they're finding is that there are staggering levels of government fraud. It's just, I've always been a small government, small spending guy, but even the levels of fraud here have shocked me. And so right now, economists are facing a crazy situation. So on one hand, it's clearly in the best interest of the country to eliminate as much fraud, theft, waste, and money laundering as possible in the U.S. government, right? None of that adds to the quality of our lives. It's just theft, and it should be stopped. Here's the issue that economists are facing. As we cut that spending and wasteful employment, technically we're going to enter a recession, right? Because that government spending not only contributes to GDP, it's all of GDP growth. We've got a situation where cutting the waste, which needs to be done, and that waste is not creating value for any of us, it will make it look like we have negative growth. Now, technically, according to the equation, according to the formula, that's true. But, again, this is like, the analogy I could give you would be, Rob, imagine we take our credit cards, we go to the candy store, we buy huge amounts of candy, then we throw that candy in the garbage, and we tell people that because we spent more, our income is up.
Right.
It just, the whole thing makes no sense. It needs to stop, and they're trying to get it down. But until that happens, as that happens, we are going to see cuts in government spending, which is going to lower GDP or the calculation of GDP. And obviously, the employment reports are going to take a gigantic hit. By the way, have you seen the number of houses on sale in the Washington, D.C. and Northern Virginia markets?
I've heard.
Yeah.
I'm a little bit far removed from that market, but it's made its way to the West Coast too. Yeah.
Yeah. And people there, like, there are Google searches up for like defense attorneys, extradition. Like, people are worried about being extradited from other countries. It's just like the combination of houses being put on the market and insane Google searches that people are doing is really something to watch.
Gary, I have a follow-up actually, just in relation to what you were talking about. Okay, with that cut in spending and then technically sending us into a technical recession, I'm assuming that's just an indicator to the layman or even the economists, right? I think at this point that are looking at this GDP number, seeing negative growth. And then, I mean, what does that do to equities when in reality, this is actually solving a huge problem? I mean, will we start to see, declines in the Dow and the big indexes just based on this GDP and information once this happens?
Yeah, so that's really the R's go to 11 question for everybody who's a fan of This Is Spinal Tap. The question is, what is it that matters?
Right.
Reality or the thing you're using to measure reality,
Right.
right? And so cutting government spending, cutting wasteful government spending, cutting theft and money laundering and fraud, that's a great thing. And it will make GDP go down, but that's just the thing that you're measuring. If you are in the private economy, if you're not in the business of stealing from government, right? Anything that reduces the load that government is placing on the private economy is going to be a good thing. So cutting this kind of spending will actually be good for the dollar. It'll be good for bringing down interest rates, right? All of that theft leads to increases in the money supply. That leads to inflation, and that leads to higher interest rates. So reversing that will actually be better for the people in the private economy, but Wall Street will, of course, freak out about, the thing that you're measuring. And so,
Right.
it's are you focused on reality or the thing you use to measure reality?
Yeah, makes sense. Thanks for clarifying that, Gary. Again, this is this week's version of the 5 things. Please head to deepknowledgeinvesting.com. You can grab a free subscription to be updated on our new issue that drops every single week. Keeps you in tune with everything you need to know about investing. This week's version is called the Public Recession Issue. Again, be sure to add your list to our email subscribers. Also consider a premium subscription for full access to the website. And if anything, please subscribe to us on YouTube. Send us a like, leave us a comment, question, tell us we're good, tell us we're bad. If we're bad, though, Gary, what's the rule? Let us know why, or
Just
why
tell
you
us
think we
why.
aren't
Yeah.
very smart, right? Which is perfectly fine.
Yeah.
Perfectly fine.